Hello everyone, thanks for joining me, and my name is Sam Sari from Australia, Melbourne, and those who are regularly follow me understand that I haven't been doing this for a while, and the story is that I got COVID, and the COVID stuffed me up a bit, not as bad as other viruses in the past I had, so it's my first time getting COVID, but it did sap my energy, and I tend to fall asleep a lot. So that's one of the side effects I've got. And anyway, that's pretty much the reason why I haven't been online for a while. It's taken a while. I'm going to the second week of recovery. So just bear with me with my husky voice. I've got tea next to me, so I will take a sip once in a while I talk, because my throat is dry. And it's pretty much the reason why I haven't been online. But anyway, so I've got a few people online, and you can see the chart in front of me, and if you have any issues hearing me, just let me know, but otherwise let's start off. And if you did follow me in the past, you would have some background to this information, and if you don't, well, I'll just do a quick overlay as to what we're seeing. I'll put in perspective from a wick-off perspective, or distribution, or accumulation. These terms, hopefully you understand. They're all technical chart terms, and you need to understand those terminologies. And along the way, I will potentially explain some of them. But anyway, let's start. So what we have here is Bitcoin, and on the bottom of this chart we have the monthly moving averages, the monthly EMA and the monthly MA, and these were historically levels that kept the bull market. So if you were to go back and look at times where these were compromised, we had capitulation. And I've discussed this in the past. So this is the 21-month moving averages, and here we had a history where once we lost that level, we dropped significantly and capitulated and found the bottom. And the two top ones are the 200 daily moving averages. One's a simple moving average, and the other one is the EMA. And similarly, they acted as resistance. Once we lost those levels and acted as resistance, you can see we had a squeeze between these two moving averages in simplistic terms, and then we dropped. So here we had a bit of complexity with these moving averages, but in an essence, they did play their role, and once we broke above them and broke above the 200 moving averages, you can see we had a bull run. So that is just putting things in simplistic terms, what these moving averages do. So what we have here, and if you don't know it, it's a distribution structure. And the distribution structure is basically, could be many formations. You can have a wedge of a distribution structure, and then you just break down. And there's usually a neckline that you lose. And once you lose that neckline, this becomes, there's a few models that this distribution looks like. And the wick-off models pretty much represent these. An ascending wedge, head and shoulders, double top, whatever you want to look at it, they're all distribution or topping off my formations. So what we've had is a bit confusing, but what it seems to be, and it's not confirmed yet, is a distribution structure. So if I was to just do that for a sec, you can see that historically we had, let me just pick another chart, give me a sec, and I'll use this one. We had our first thrust, up thrust. When we had the bull run, we had our first up thrust, find resistance, and that was the 1.414 Fib Extension, which is makes sense why there's major resistance, and we had that correction. So what we saw here, the initial phase, is demand zone, resistance and demand. And then we saw ever so higher highs, but weakening. So we're not getting this strong movement. And so this is a big strong wave, and we count it as wave 3 if you look at the elite wave. And this was a distribution top and fits perfectly into a wedge top formation and a perfect shorting position. And as you know, it came back down to this demand zone. So we have this demand zone again. And yes, we had that. And if you know the Wyckoff methodology, you have this capitulation, down thrust, and then you have this automatic reaction, and then you have this cycle of accumulation, and then we had that movement up. And again, very similar, we had another topping off motion and so on. Here, we were hoping that this was the accumulation, and this last part was very important, and we broke it. Now we have this down thrust again, and what we're looking for in this area, and go back to the other chart. As you can see, I've created this channel, macro channel, and we are looking for another reaction, potentially to this level and then further down. So that is aligned with this chart. This is the Wyckoff accumulation or distribution. It's one of many. And as you can see from this reference, that we had our BC, this area is the BC, we have our upthrust, last upthrust, and we didn't have this LPSY. Or we might have, you can say that is it. But it's not perfectly aligned, but that's the case. And what we've gone through, this last phase, you could say this is the LPSY, or we are going through this neckline area support line. So our automatic support line is there, which is the 28K level. And you can see by using this chart here, you can see that we're going to have this last effort of keeping it above this floor level. So the ceiling's pretty clear. The base isn't. The base is this could be the base, or the base could be, when you move this horizontal, this could be the base right there. So it's going to be a bit, so we have a trend line that supports this, so we might be able to see our bounce, and this last effort drops, and we might have that up thrust from here. That's the hard part. This is where it becomes difficult to know which area. I do expect a bounce from here. Right now is not a good entry because we don't see any reversal candle yet, so we need to look at the small time frame. But you can see that it's stopped. It's potentially stopped. If we go to the small time frame, it's ever so on the edge, really close on the edge, and it's not an area that you enter. You want to see something where you see a green candle or a wick, so you don't want to catch that falling knife. But that's one position that we might be interested in getting in. I'm not going to jump in right now. I want to see what takes place. I'd like to see a bit of resistance and the support, and it's very early at the moment, but give it probably a day, we'll find out that if this was a support level. Otherwise, it's going to be where historically we had this the demand zone here. So let me just do this. Strong colors will be good. So this lines up. This area of demand, horizontal wise, is an area of demand. So we can drop down to the 29K level if this doesn't hold. There's a few reasons for why we can see that. Now, what we have, so we're looking from a distribution perspective, and we lost a key level support. This is a bear flag. So we had this movement, one strong downward movement. We had our bounce, and ever so weakly, you can see the middle of the channel was our last area of resistance, right, with the 200 moving average. So they come into play, and what we have is this bear flag or this continuation to the downside. Now this target could be seen as many ways of to the downside, and I will talk about this. I will talk about where the potential target is, but based on a few assumptions. And so what we have is the crypto in correlation with the bigger markets. So let's have a look at one or two charts that are important. So let's pause this for a sec, look at this Bitcoin market, and let's look at what the SP 500 Nasdaq accumulation correlation is. So this is the Nasdaq. All right, so the Nasdaq is pretty much doing its own correction, and if you know alleyway theory, what you tend to have is you tend to have waves, all right, and then once you hit the top, which is wave 5, you have a correction of some sort, and it's usually A, B, top of C type of thing. If it's a continuation, if it's still a bull market, then this ABC correction is not that deep. It can come down a bit deeper, but what we tend to do is we use Fibonacci to find our targets just by doing this Fibonacci extension type of thing, and the 1.618 is usually a good level of entry for our correction. So what we have seen so far with this Nasdaq is, okay, we've seen that. You can say that's potentially the correction. We have wave 3 and 4, or wave 5, and there's no way to know. Either way, wave 3 and 4 is generally a complex wave. It's not usually easy to see. It's some sort of area where the market wants to work itself out. There's a lot of manipulation, a lot of ups and downs, and it's usually sideways. So there's nothing clear. Sometimes we're lucky and we get a descending wedge or inverted head and shoulders, but it is a complex area. And then you have that wave 5 continuation. Then you have this top, and then you have this extension, and wave 5 is usually fits into some fib level. So if this is 1, this could be up to 1.618 golden ratio, and then you find this big correction. What we have here is what we thought was ABC. Right, so we have 3 types of ABC corrections. We have one like that. We can have an A, B, and a C, like a double bottom. Or we have a deeper one. That could be A, B, and a deeper C. So right now, you can see that the double bottom didn't quite work out. So that would have been our A, B, C, and then up. And so we passed that point. Now this extension, I have that, and we have these other ones, all these fib levels. So let's have a quick look at where this could potentially go. So we ruled out one of them. So if we do our Fibonacci to the swing from top, swing bottom, and to the swing high, and right now I do see potentially, even though this trend line looks like support, and that could be a support line, so we might be able to find a reversal. We might be able to find a reversal and continue on. but it could just quickly drop down to this one. This level is of interest to me, and there's a lot of volume here. So the apex of this is pretty much right there. However, we can have a bear market. You know, this was a real good run, and having a bit of a deeper correction makes sense. So potentially we can end up here as well. So no one's going to be able to tell us what's going to happen to the market. In 2020, with the COVID incident, we had a massive correction. This was abrupt, and capitulation was a good sign of entry. We want to see capitulation here as well. If it goes sideways, I just don't see anything that's going to tell us that's going to go up. There is the market is playing it safe. There's not much growth in the economies, mass printing, and so the dollar becomes the safe haven. So if we were to look at the US dollar, let me just get up the other charts. And here's the US dollar here. Let me just move it across. Let's play the US dollar. SP 500 is also pretty much correlated with it, but we're not going to look at it at the moment. Let's look at the US dollar. So when the bigger markets look at playing it safe, they run to the dollar, unfortunately. And so what I've done here is, this is an old chart, and this is the weekly chart, and you can see back in 2000, in 2000, the US dollar was very strong up to a point, and then had a massive correction. So you had this, what do you call it, inverted head and shoulders, you want to say? Head and shoulders. Did that massive structure, it found its target, and then dropped further down. We had this wedge formation, and now we're breaking it. So we broke above it, and what it's doing is using this trend line as support. So you can see how they use it as support. We've done this big macro bull formation, and we are looking to break above it. So again, let's just get rid of some of the lines for a sec. You can see it's pretty much breaking above that structure. It's at a level, so if I was to, just give me a sec. I just want to hide a whole bunch of stuff. That way we can look at the US dollar in a good way. Okay. So if the US dollar, we have this macro line, and it's pretty obvious that it uses as support. Going sideways, what we had was potentially a bull flag, a continuation pattern to the upside, and the stock markets are dropping, therefore the US dollar is going up, and that's the basically demand. This structure, we can look at it from a few perspectives. We can do a swing low to swing high to swing low, and look for the 0.618, which is about 111. Okay, so in the coming weeks, we potentially could go up to this level here. The other way we can do that is just do the bottom to the top and look for another extension. And again, the 1.618, 1.272 still is in that area. Let me just do that for a sec. Just a reversal. And again, if we look at from this structure, from the bottom to this structure to the upside, where we can see a fair bit of confluence again with this level. 1.618. So this level to me is going to be a strong resistance. So, and it's a neckline, it quotes to this neckline here. So that tells me, yeah, bullish. US dollars is going to go up, continue to go up. It's not going to go up in a straight line. It's likely to find resistance here. So let's do the bottom to the top, to this midpoint, and you can see the 618 is broken. If I was just reverse this a bit. Actually, probably just put the default. It'll probably be better. And we can see again this level here is a major fib level as well, right there, 786. So that's going to be my area where I think Bitcoin might find its bottom, and what we might be able to see is, yep, just continue up and then drop down. Very similar to this. So what we have here is it broke that level, it done another continuation pattern, and you can see this type of ascending wedge and the breakdown. So we want to see that, but at the moment it's too early. This has got a lot of momentum behind it, so the US dollar is likely to continue on, and there is that possibility that it could do a double top. So we can potentially go all the way up to that level. So I do see this being a very strong resistance. We generally tend to get the formation and apply from the breakout, and so that's another way of doing it. We can potentially say that's a breakout, and we can have a double top. And so I don't know what took place in 2000 to cause that, from 95 to 2000, but there was a flight to the US dollar, and then we had this stock market bull run. So when the stock market went bullish, people used their dollars to the stock market, and now we're seeing this reversal. Long term wise, if that's the case, we have this macro range, and who knows what's that going to take place, but it's interesting to see that this can potentially be a big bottoming formation in the long run, in the many years to come. Anyway, but I'm just getting off track. This is pretty much a very high momentum to the upside, and if we were to add, I know, the RSI or some other indicators that you're familiar with, let me do my stochastic RSI. If we go to, actually the monthly will be, or 2 weeks, probably better. We can see that the RSI is getting overextended, and again, it's got a lot of room. In the past, it done a good run here, and this does look parabolic, so this can go up to that level there. The stochastic is pretty much on top as well, showing upward momentum. Let's look on the weekly for a sec. Yep, so we can still see. But if what we want to see is a breakdown of this. If we breaks down this trend line, if the US dollar breaks this trend line, then we're going to see pretty much correction. But at the moment, it is just going up. So this is a weekly chart, and it seems to be in a channel going all the way up, and it wouldn't surprise me to hit the 88%, this top range. It's already broken the previous, so here we have serious, yeah, so as you can see, there's not much to go before it finds resistance, but this, just by going sideways, this still could go up. So the indicators show a lot of momentum to the upside. If I look on the monthly is scary, because the monthly shows that it can go much higher. And so it's in line with my TA when it comes to the US dollar. Alright, so let's go back to this. If you've got any questions, I'll just post them as well. So what we have right now is pretty much a bear market. We've lost, on the top, we've lost 52%, and yep, should find a bounce. But if you're not sure that it's a bear market, you can look at previous markets and you can see how much they dropped in the past. So 2018, it dropped initially, it dropped 68%, and then capitulation took down to 83%. And there's people that argue, oh, okay, that was back then, markets are very different now. Yeah, you can make that argument, but you can also argue that this is a good big run, and this is definitely what looks like to be is a distribution. And so what we have in the short time, so let's look at the possibilities of this short term. What I want to do is bring another chart. I'll bring this one here and go into detail. So let's look at the daily. So there's a few assumptions here. This does and could be pretty much a head and shoulders. So if we find a bounce here, at the moment, it seems like it's going a bit further down than expected. So I thought that there might be a good chance, and it's still too early. This could be turning out to be a wick. And what we have here is a volume profile and the point of control. So if you're not sure with what I'm talking about, volume, this volume profile shows you where buying and a lot of volume is being transaction wise, and this is the apex of it. So this level, medium, is where the majority of volume took place for, if you average this out. So this is going to be a strong resistance, which is about 39k. So if we were to have this head and shoulders, if this was to take place, I would definitely look to short here. Okay, so if we were to get a bounce, if this was just going like this, and then, yep, I'll be looking at this 37k to this level here as a shorting opportunity. It might not eventuate, but that's a scenario that I'm looking at. It's a possibility. Right now it's too early to say, and anyway, that's pretty much it. If I was to get rid of this for a sec, I'll get rid of the volume, and I'll get rid of this head and shoulders. We can also look at, if it was a head and shoulders, so we get the height. So if that's the root, we capitulated, and we had this automatic response. This height can be taken from there to there, and that, so it's one level that I have, which is a monthly support level, which is 28k. So this can come all, based on this structure, this can come all the way down to the 28k. And if it was a head and shoulders, if this was the bounce, then that will be our breakdown, and we're looking at 24k if this was to play out. So if this was to come, then we have our left shoulder, we have our head, we have a right shoulder, and then this 23, 24k seems to be the case where the target is. So this is looking at from the local perspective. Now let's look at a bigger picture. So putting on your bearish hat, go back to the monthly, Worst case scenario, a good case scenario is what I'm going to look at. So what I've done, let's just zoom in. So this is the monthly chart. So if this was wave, okay, let's see. Let's just get rid of this for a sec. And I'll get rid of that. What we have, I'll put it there. I'm just wondering why monthly. Okay. I think I have to go to the weekly to get this out. Okay. The weekly chart will do the job. So if we look at this historically, 2007, 2018 or 17 top, wave 5, what we had is the 1, 2, 3 correction wave. Okay, so we've got there 1, 2, and up for us. Then we had this A, B, C correction. All right, that turns out to be this macro formation, a bullish formation of some sort, and then you get this. So we broke out that level, found the retest, and we had that bull run. This 1, 2, 3 formation. This 1, 2, 3 formation is well known. It's a well known formation to trade. Even the small time frame or the large time frame, it fits into many things. And the ABC correction is what we talked about. It could be a deeper one, and in this case, we had the COVID incident, and so it was much deeper than expected, and then we had the bull run. Similarly, we have our up thrust, we've got our 1, we have our 2, and our 3, very similar to this. And what we're seeing is this ABC correction. Now the ABC correction is very difficult to find out exactly how deep it will go. So by looking at this ABC correction, we're going to have a few levels. So if you look at my chart, I put monthly levels, these purple ones, monthly levels. The monthly levels are worked out just by the monthly chart, and you get the body of the candle, the wick of the candle, and so I'm looking at this level, monthly levels. And we have the moving averages, got the 111, and if I was to extend this, if I was to turn on the other moving averages, so that's the 200 weekly moving average, and you're going to start seeing that there is confluence with previous bottoms of support. So we have these levels here. So one is about 20, so this one here is the SMA, and this one is the EMA, right? And in many cases, this one here, so let's just do this, not that one, the EMA wasn't part of it, it was the SMA. So what do I have here? This one is the monthly, okay. So there's confluence here. Right now, if I was to remove this, we are looking for this moving average to be support on the monthly. So this can come down, and then we find the wick, and we pretty much bounce. So how does it fit into the weekly chart? You can see how things fit. Now, the moving average is one way of finding targets, and if I was to just get rid of that for a sec, hold on, give me a sec. Is that the one? Okay. Right. Fib extension. Right. So if we were to use a fib extension, just to show you how it's done, on the top, swing high, swing low, to swing high, you're going to see, I'll just increase the browser size so you can see a bit better. You can see we have the 1.272 extension, so we're doing the fib extension. From the top, swing high, swing low, swing high. We passed the 1, so this was our level of support. It seems like we are dropping, and we have this fib extension here, 1.414, and we've got the 1.618. Okay, so worst case scenario, we could end up down here, all the way down to 10k, worst case scenario. Good case scenario is this moving average. So this is going to be definitely the 23, 24k, a strong level to buy. It's got a major fib extension as well as historical support with this weekly 200 moving average. So this is definitely a buy zone. How high will it go? I do see potentially coming up to the 39k level. And I showed you why using the volume profile. It comes up. So that volume profile is there, and it's roughly 41k potentially and 39k. So we can potentially have this bounce all the way up to the top and then back down again. Now where is my ABC correction? Give me a sec. Is this the one? No. Where's the other one? Oh, here we go. So this is looking at the big picture. We had our wave 1, 2, 3, 4, 5. Now we're looking for the ABC correction. Give me a sec. Okay. That's the one. So we're in a bear market. Now, the things that I'm talking about here, by the way, is just not my idea. I got a few, you can say, mentors that I follow, and seasoned traders. They've been in the business for a long time, and I've been, I suppose, a dedicated student learning the craft for a few years now, and you combining technical analysis with Elliott wave theory and so on, we come up with these ideas. And what I'm trying to explain to you is, you know, we use a number of tools. You know, this is wick-off distribution. It always works. It's just trying to be aligned with it. So when we align this kind of stuff, there are circumstances and assumptions that will dictate what's going to take place. What we look for is confluence. We look for Fibonacci, moving averages, volume profiles, points of pivots, where the pivot points are. And right now, what we're looking at is this level here as a major level of interest, purely because of historical data, Elliott wave count. So what we can have right now, if I was to get this ABC correction, we can say that's our A, B, C. That's one Elliott wave correction. It might be enough. That might be the case where the markets say that's the bottom, and we'll see a bottoming formation very similar to these ones here. We will see a wick-off accumulation structure coming into play. What we'd like to see is a capitulation next week. Hopefully it happens very quickly and deep, and when we have such capitulation, it's a perfect entry to go along. So here I'll be looking at 22, 23k or 24k as a major area to jump in. Then we reassess to see how much what the dollar is doing, what the Nasdaq is doing. We look at those aspects as well to align with crypto to see if we're going to continue to go long or we're going to see a rejection. Is it going to be this type of rejection? Make sense? So it could be this correction, or it could be this correction. Whoops. Or it could be this correction here. At the moment, we're playing this correction. And then we buy, and then we see if there's a topping off formation, exhaustion, then we sell. But the whole point, guys, is if you haven't sold, if you aren't cashed up, do not sell here. It's a bit too late because we're pretty much overextended. If we look at some indicators to support our theory, you can see that very clearly it's shown historically that massive bearish divergence took place. So we've got higher pricing, but the demand has dropped off. Whatever indicator you use, you just got to be an expert in that indicator. The RSI supports this as well. So the MACD right now is going sideways, as you can see. So it's pretty much showing that exhaustion is taking place. But here on the weekly, this indicator showing all the RSIs on the bottom. So there is no definite reversal anytime soon. There isn't. This is going deep. If we look on the monthly on this chart, and we look at the indicators on the monthly, you can see that once we've got this crossover on the MACD, very simple, we're going to go deep, and that's what we're seeing. It wasn't hard to work that out. So you should have used that as a way of coming. So once it crosses over, you can see the bastards push the price up and get more liquidity, and then push it down. Here, this indicator shows everything went south on the weekly, and now we've got this red one that's also gone down below 50%. That's telling me that's going to go a deeper correction, aligned with our suggestion that this is going to be a deeper correction. 20, 24, 25k is pretty much on the table. If you know about the CME gap is around there as well, 23 to 25k. So it makes sense that will be covered off. And you can see historically these levels on the monthly are levels of interest and influence. The question is it going to continue on? And that's what we want to look at. But the indicators definitely tell us that we are bearish. So let's just clean this up a bit. So I'm sharing you areas of interest. Let's just do this for a sec. The candlesticks pretty much tell you that's so. Well, we have two green candles, then we have this one candle that engulfed both of them, so that's bearish. Then we got another level down. What we're looking at is this level here, which is the 29k, and it's all the moving averages. That level we will look at on the smaller time frame to come in and make a bit of a trade to go long. I need to look for a good setup to exit or to short, but be bearish. Do not be bullish until we see anything change. The whole thing is we need to reassess it on a regular basis. So what I'm showing you today can change. Depends what the markets do. But at the moment, the markets are telling us that it's going to go deeper. And yeah, we will find this area of confluence. There was a lot of demand in the past. Now let's go to, so that's my take from the macro, that we are likely to come all the way down here to 23, 24k and find a strong rally. And what will happen is it's pretty much clear that this is an area of interest, and I will go 100% in and then start taking profit as it goes up. This level here is going to be a strong resistance. So there's a whole bunch of levels. Now we've broken a strong macro level. So once we broke this level and we come down, it's not going to be easy to break above it. So that's why we got B not looking past the average price range, which is around there. So point B could be a bit lower or slightly higher, but it is definitely there. So if we were to look on a small time frame, not 4 hour, what we can do is we can get this from the swing low. Actually, give me a sec. Now, if that was right there, if that was the returning point, if that's that level, then we can see. Just give me a sec. Just get rid of some of these moving averages. You can see this point of control, this red line, and I've done the swing low to swing high to swing low. This is going to be, the 0.5 is probably the most I will see going up. So this could potentially go to there and then drop. This point of control is pretty much another level, which is about 39k, and then I don't see going past the 0.5. So if it does, then definitely the 0.6, 21k is too. So these are the areas where you will look for shorting. And to short it, you'll just look for something that's bearish type of setup, and then that's your final exit. That will be your exit to get rid of your, whatever crypto you got, and then it's going to potentially, this is where we start capitulating, because there's going to be a massive response. Those in the know will look at this. So this line could continue on, and the 0.618 is definitely a strong resistance. It just really depends if this does bounce. I do expect a bounce, because we are pretty much overextended. So here we are very overextended. If I was to add the RSI, let's see what the RSI looks like. Yeah, so the RSI is very overextended, so we should see a bounce from that. So just keep an eye on it. Look for, come to join our group. We can give it a signal to jump in when we think. At the moment it's too early, no assumptions. But I am looking for a bounce, and this level should be. The thing is, it should bounce, but it might not. And then if it does, it's anywhere here. So you can see from here, anywhere around here is demand. And if we look at the dollar, let's look at the dollar. What is it doing? Let's look at the shorter time frame. Give me a sec. Let's look at the 4 hour, see what it's doing. It's finding resistance. It is definitely finding resistance, and so it might just take a while before it drops. So just keep an eye on that for this week. And because this is not going to potentially go higher, it's just going to go sideways, it might be enough for crypto, Bitcoin, to start doing the same, going sideways, and then a bit of a bounce. So keep an eye on both charts, looking at this. One simple rule, this is what you do, simple rules. If it breaks below that trend line, it's likely to drop deeper. So this looks like a topping off formation on the 4 hour. Yeah, it definitely does look like a topping off formation, a broadening wedge, and it doesn't mean it's going to drop deep, but what it's going to do is it's going to give some relief to Bitcoin. So yeah, I do see this potentially topping off, and we've talked about it anyway. Why it's resistance at the moment? It seems to be a major fib level. Let's look on the daily. Yeah, it is a major fib level. So, and it matches that level here as well. So, bit of a double top. So we might just see price coming around and then back up again. So previous level of support. So it might just come down this level and then back up. And that might be similarly dropping down. So it might be in sync, as you can see. All right. So let me just my cold tea. Okay, so the question is asked about Ethereum, also being thought on Dot and Link. If you have any time, thanks mate. Alright, I'm hoping you guys understand what I'm saying, because I'm trying to be sequential in my explanation, talking about the bigger picture, talking about the local area, and the theory. One guy's theory is that he is pretty much thinking it's going down to about 10k. I'm thinking from a big picture perspective, that 1.414, 18k is definitely on the table, and the worst case to me is 14k. It might be a case where if we look on the weekly, so we have a point of control. So if I was to put this volume profile, if I pick the volume profile across, you can see way down here, around 12k, there's a lot of, and you can see just from the candlesticks that this is a major resistance. So if price was to come there, it's definitely a good level to buy. And you can see from this level onwards, there is not much volume. Like it went parabolic, and the most volume is this level here. So you can see here the volume profile. We lost that volume, which is about 38k. That's why we had a fair bit of a battle there. Once we lost the apex, the volume starts dropping off, and you can see between there and there, there's jack all. It's empty. It's really, there's only one level, which is 24k. Just even the volume profile supports that moving average, that there could be a bounce based on this volume profile. And then you got this level here, and you can see the volume increases. So depending on the market, I do expect a bounce, and then this level of here, if we lose this level, it's going to be a major resistance. So 30k, it could be a major resistance. And see these levels? So you have this capitulation, and then he finds a resistance level, and then does the bottom, double bottom, and then you see this accumulation. So if this was to drop to this level, expect a pullback, just like here, perfectly. It just always does it, always pulls back, and then you buy the second bottom. So make sure you sell at a nice level. Don't be greedy. It will come back and retest that level, and it might go up. And if it fails, you have your stop losses close, and then we'll go to the next major fib. And this major fib is 17k at the moment. Yep, that is another area of interest. But the big bulk of it is always been this level here. So we have our C on this monthly level of 13,888. And that's our AB, major deep correction. But that is once we rule out that this ABC correction is invalid or is not applicable anymore. So what we do is we put plan A, plan B, and we'll look at the markets and so on. Okay, so we have a lot of confidence that this is a beautiful spot to jump in, and just be patient. All right. Now let's look at the Ethereum, and then I'll look at and Ethereum is a much better chart, I'll recall. So let's have a look at Ethereum. Geez, it dropped a fair bit. I missed that short. Bummer. So Ethereum had the same setup, but a bit more advanced. But now it's lost that key level, as you can see. What we had at Ethereum was that was a level there, and if I didn't have the COVID, I would definitely look to short that. Missed out big time. COVID wrecked me. Got to find a real nice trade there. Anyway, as you can see my lines. So what we have with Ethereum, we have a lot of confluence with Ethereum. This area is demand. So what's going to happen now is the alts are going to drop harder. Okay, and very similar to Bitcoin, swing low, swing high, swing low. Swing high, swing low to the top. And so what we can do, just get rid of this channel for a sec. And I'm not sure what this is. Just give us a sec. This is Binance. So Binance doesn't have the history. Give me a sec. US Ethereum. I think Polynex will have more history, I think. Let's put a tether there. Where is it? Oh, there we go. Is that the one? Yeah, so if this one has more history. And this tool, the Ali Wave come from TradingView for free. Does the counts, look at it. Up to a point. So you've got to validate it. But you can see, what's this one, moving average? I've got my 500 there. For some reason, I had it there. And if we look at the history of it, once we lose the 500 moving average, just like there, we capitulate. So look at that. So that's a big, massive move. 1, 2, 3, all the way down. So that's our ABC correction. So I would expect Ethereum to do the same. If we use this as an example, from swing high to swing low to swing high, let's put our fibs in there. It went beyond the 1.618, just a bit more capitulation, and you can see how all these fibs become relevant. Alright, so 0.618, perfect resistance, and down. So what we have, and if you're familiar with certain trading methods, this was a bar, so BAR method. I'm a big fan of it. Pump and run strategy, and so once we got from there to there, pretty much clear, then you look for the breakout. That COVID stuffed it up, obviously, but you can see these moving averages as well as the fib levels. Once we broke it, this major fib level here of 1, we went bull run. So if we apply the same approach, we have to make an assumption that this is the bottom here. So this is our bottom. Swing low, swing high, swing low. Okay. Now, if we look at this profile, and we add our volume profile along with it, I'm just going to apply it to this all across. Give me a sec, guys. Sorry about that. Still got some phlegm. So if we look at this point of control, so what we tend to do is pick our levels, point of control, and I've got my templates here. Where is it? Not this line, sorry. It's the other one. We just put our areas of control. And we map the next one. And this point of control really, the next one really starts around here. So we just put them down. Not to say it's going to do anything, so what we'll do now is look at the weekly. Bit of rubbish there, let me get rid of that. And we can see the weekly charts, the weekly candles right there. And we've got another weekly there. And then the other weekly range is roughly around there, just ballpark figure. And now I'm going to look at the monthly, chuck in the monthly as well. So the monthly is right there to the body of the candle. And realistically, there's not much. There's some monthlies here. But you can see that the bottom of the wicks, I'll probably use those instead. Monthly wicks. And then the next level, pretty much the weeklies cover that as well. So it's got a lot of confluence here. Okay. And you can see now, let's just look at our moving averages. Our RSI. It's not going to help us there. So let's look at this from a weekly perspective. Now we can see strong support. And it comes down to this is not going to find much support until it comes down to here. Okay, so this structure, we can use this structure. If we do this, the height of this structure from there, pretty much to the bottom. Give me a break. Let's get rid of that for a sec. So if this was our structure, that's going to be the target, the height of this structure. And if we were to look at the breakout, it's potentially that height of the structure is what it looks like. The other one is from there to there. We add that as well. So that could be the other structure. And look at the confluence it's got. So the structure targets is there. So we've got about, and its confluence with the monthly and the point of control with the volume. So Ethereum is about 1800, is a good level of support. Depends which one falls quicker. And then the next level is 1200 or 12, yeah, that 1200 range. However, depending on the market, it could go for this or this level here, a bit more capitulation. So we would like to see what's taking place. We know that we can put that line there, and we can try to see if there's any correlation to as a channel. So yeah, it sort of comes down to it. I wouldn't trust this channel anytime soon because it's a line. It's an assumption that it could go very steep as well. You know what I mean? So at the moment, we don't have enough to validate this channel, how much it's going to go for. So if we do this, we can see the 1 is very close to this Fib extension with the volume, and so that is a range I'll be interested in. I think Ethereum will find good support. And if we look at this as well, you can say that once we break that level there, realistically, once we break that level, this is dropping hard. This is it's probably a good one to short. Finding an entry for Ethereum will be pretty good. You can say that again. That is pretty much the line that's pretty much said this trend, this level. So we've got our reference points. All along here was support, and once we broke it, it's going to go deep. And this is realistically, this is an ascending wedge, really. And the root of this wedge is right down here. So again, this level, if we use the body of the candle, yeah, we can probably say that. The root of this wedge is right down here. Again, confluence with this. It's a perfect level. That's the target. So it's probably a good time to short Ethereum. Find your entry on a short time frame, but definitely take profit here, find the bounce, and then it probably go further down. That's what I got for Ethereum. So let's say on a small time frame, can we jump in? Doesn't give us much there at the moment, but I'll save that. Definitely dropped a fair bit today, didn't it? Or since yesterday. How much did it drop? From there, 20% far out. That'll be nice and short. Missed a few bloody shorts, far out. Anyway, so this is now at a level of support. Historical low, yeah, it might come down all the way down to there, really. Very possible. And Bitcoin's pretty much in a similar predicament. Alright, so that's what we got for Ethereum. Worst case scenario, down into that. So I've got just below $1,000 really, based on this. We could also, let's see if we get something from here. In the Fib, 618 is all the way down to 380. So it can come all the way down to 386 potentially, and the volume's there for it. It's going to be difficult all the way down, but probably Ethereum, with the Ethereum upgrade, who knows. But definitely this level, this is a topping off formation, you can tell pretty much. And if we look at the, if this is the daily, let's look on the weekly. what we want to look for is anything that breaks this level, become a bit bullish. It seems like a descending wedge, but it could also be a channel as well. So don't be bullish until it breaks this 50%. If on the macro level, 50% of RSI is pretty much a changing trend, and this is just dropped, and these. So we've got. Good thing about this one here is it's very well aligned RSI. So this, if we were to see something, this just that's the area you're short. If there was a bounce, and then in line with the fib levels and so on. So that's what I got for that. And anyway, I'm trying to answer as many questions as I can. And Bitcoin, I think I've done the job. What is it right now? 32,000. Yeah, it wouldn't surprise me if it comes all the way down to the monthly bottom. Oh, it's dropping still. That's nasty. Yeah, people, you need to put your lines and find your exit points, because you never know what's going to do. This is nasty. What a shame. Hopefully, I think we have about 3 months of downside. So we're 34 here, and it's pretty much, capitulation is going to come soon. This is going to hit hard down to here for sure. I think I don't think we're going to get a bounce. Doesn't look like it. Bad time to sell if you haven't sold. Let's quickly look at DOT. Bloody good projects, but far out do they lose their money very quickly. Oh, jeez. It's going to come. It's going to come back down to $5, back to where it started from. So it's going to do accumulation around here. And when that was those, okay, fuck, I don't think it will go further down than that, but you never know. Geez, that's dropped a lot. Yeah, DOT will go down to this level. This level was accumulation. That was accumulation, and it's possible that it can go down further. But I think that's where it's headed for. There'll be pretty much, the RSI is pretty much all the way extended. And we can see that the MACD, once it breaks this level, this straight line here, that's it, it just went downwards. Mate, if you would have short it from there, that would have been a real nice. How much has it dropped? 80% already. The alt's going to get killed. That's what it's telling us. Yes, definitely, capitulation is good news. The quicker the better. I wish the stock markets did it as well. Well, I had the stock markets do it, so Bitcoin does it as well. And the problem is, and this is a problem, let's look at the SP 500. It's a bubble. Everything's a bubble. The markets just went, let's see, let's get rid of this. We'll look on the weekly. When we look at the SP 500 artificial crap. So what do we have here? Okay, so this is what I had before. In my stream, I think in the past I talked about this. If we get the middle, that's the mean. So that's the average price range. And anything, so what happens in a channel is you have deviation, you can have 1, 2 or 3 levels of deviation, and it's not, I haven't got the tools to do it here, but what you can do, hold on, give me a sec. I wonder if this will do it. No, it doesn't do it. So deviation, levels of deviation, let's see if we can do it with this. Fib from there. Come on, background. Not interested. So if that's a macro channel of some sort, let's just, where's that white? Give me a sec. It's on here, okay. Let's see, that's going back many years. And if we were to do that, and if that middle part was 0.5, so you can see that the channel, I'll just get rid of this stuff here. This was a major correction, as you can see. That was a bear market. And back in 2008, 2007, massive bear market, massive crash in the markets. So you can see that was huge. But what it's done is set us up with the range. So potentially, if I draw this any correct, that's 1, and that's 0. If this market, if the climate is the way it is with the Great Reset and all the other bullshit that's people talking about, this could come all the way down to this bottom and then bounce. As you can see here, what we have, it's not the best chart, is it? Let's get rid of this. Can't get rid of these letters. As you can see, I can't get rid of them. I don't even know what they are. 10-20 moving average. Give me a sec. Annoying. I'll delete them. Okay, that's better. So what we have with SP500, you can see here, head and shoulders, and when it broke it, so if we go in close on this one, let's just go in close, you can see left shoulder, pretty much head, right shoulder, and then you break this level and it capitulates all the way down. That's a nasty market. So if we look at that scenario, it does repeat itself a few times. Like you can see it here. It repeats it there. And then, but it's a less of a correction. Here it didn't quite do it, but let's see, this one was nasty. That was a bit deceptive. There was a wedge, and then a continuation, and then capitulation. So these formations give us clues. So what we have right here now, let's get rid of this for a sec. You can see if we apply the same rule, can you say that was very similar? So you can see that that level was very important. This level, neckline, got a good rejection and got the second rejection. A second rejection made it go deep. Now we've got this middle layer, we potentially bounce, but now we've got this additional level. And if we do Fibonacci and all the rest, so if we were to apply that Fibonacci, the 618 could potentially be a resistance. Reverse. So this middle channel is going to be average, I suppose, the right price, mean price, this middle level. And if we were to apply Fibonacci from the bottom, let's do that, to the top, apply the defaults, again this level, no, that didn't quite do it. Not so confident with that channel, but here, so this level, the 618, is pretty much this band here to me. Right there is a level of interest. This here is probably, get rid of that for a sec, this blue line. So it really comes down to is how you draw your lines. And this blue line is also a level of interest here too. So, but I do see this coming down lower. And around here is where we can find some support, roughly around there. Confluence with the middle, confluence with channel. However, so if the US dollar pulled back, we can still see a deeper pullback. Then we see this level of the channel. This line is very strong, very long, strong support. So we might find support here, a reversal to go back up. So that's A, B, and C. However, if the market's really bad, we can come all the way down here. And no one's anticipating that, but the COVID did it. This was the COVID scenario, and it really plummeted. We're not having that. This is really capitulation. While we're having something here is a bit more steady, and anyway, we'll see what happens. But definitely, so what's Mike saying? Here, next support level, 3200 region. Yep, 618. So we can look at this from many angles. So here's my, let me just put to the right. I didn't have that there, bugger. So that's one there. Then let me just do another one. This level of confluence. And the 0.5 to point, yeah, so the 0.5 is there. This, yeah, it still comes down to this range of support. So we're close to support. Got the 0.5, 0.382 from this previous support to swing high. But you can see that is a topping off formation. Question is, how deep is it going to go? What excuses are they going to come up with to make the markets drop deep? So Federal Reserve, if they increase, they said I think they're going to increase, looking at a 0.75 increase. So I don't know when the next one round is, but that could push it down a bit more. And so inflation is pretty much causing this, and a few other things. And this is definitely a topping off formation. You can see it. It's like a head and shoulders really. So if we were to do that, if this was our neckline there, there's our neckline there, and we apply that. Yep, it comes down to that same region of interest. Previous resistance, previous support, previous resistance. So this level, there's a lot of confluence. I do believe it's going to come down to this level, where we can probably, and that is a strong support area. Definitely find a bounce there. I definitely think we'll find a bounce, and maybe just continue on like that. So I'm not going to be too bearish, but definitely so this is a weekly chart, so you can see how many weeks we might go bearish. And I think I'll wrap it up on that, guys. Let me have a look at the questions, if there's anything else. Let me look at YouTube, see if there's any questions there. So I don't see any questions on. So we guys there, hello. There's no questions on YouTube, and I think I've waffled on. How long have I been? It's been a while, hasn't it? 1.5 hours. So I think I've covered a fair bit. You can always replay. You can look on YouTube once it's uploaded. But otherwise, I think that's a wrap. Yes, bearish, definitely bearish. And I was hoping that this line will hold, and it looks like it's not. I might. But too early to say if there's anything there. Where can you be bullish? Alright. Well, I got this trend line. So I'll be using this trend line to find resistance. There's a bounce, find resistance, and just keep following it until it breaks, and then reassess. But I have this macro channel as well. So if you look at this line, last point there, so anywhere here could be resistance, and now I've got all this confluence there, so I just went a line there. So these are the lines that are relevant, and this could come down all the way down here, and that's about 26k. It just depends how it comes. If it comes down sideways, it's going to be deeper, right? So, and then we've got this horizontal level of support. It's going to be difficult times to trade in the bear market, but look for shorting, go for the trend, look for going down, and if we were to look at total market cap, let's see what that looks like. I haven't done this for a while, so I might as well have a look at it. Ooh, that looks bad. Let's just destroy that. So it's broken that 0.382 level. It's coming down to this next fib level, area of interest. So we might find a bounce, but here is the major support. So the alts are getting smashed, definitely. It's not quite capitulated, so I see this coming down a bit more. This is like I said, it's doing that formation, pretty much aligned, and I had it in the past, so you can see how the LPSY is just there, and this neckline, once it breaks that, we got the bear market topping off, and that's what's going to happen. So it's going to take a while. Could be very quick, but this area is very strong support. Hasn't quite get there yet, so definitely align your stuff like this with the wick off. So that's total market cap. It's dropped down from nearly 3 trillion, and we're nearly 1.5, or just below 1.5. So we lost half the market value. That sucks. And let's look at Bitcoin dominance. Okay. So I think I've got it done. Oh, okay. So you can see Bitcoin dominance on the RSI really broke up the high, and now actually we are finding support. So it's another nasty area of support. I think they also pretty much found the level of support. So, but we didn't get to that level. So let's just get rid of these for a sec. I'll get rid of it. There we go. I do think this was a bottoming formation, and not quite convinced if it's going to go anytime soon, but this does look like a bottoming formation, this middle section, and we could, if we break, this is the bear market. So if we break this line, this white line here, or this fib level, so we can say that's another line, and if we were to break that, yeah, we're pretty much going to go bear market, and Bitcoin dominance is going to go up. We're seeing some support here, so Bitcoin dominance is finding support. It dropped a fair bit, but I think it's going to find support and go back up. And let's look at the last tool, which is Tether. Thanks, Mike. Oh bugger, that doesn't look good. This is the 3-day one, and oh shit, that doesn't look good. And yeah, that doesn't look good. This is pretty much confirming it's a bear market. And you can see, if I look at this formation, look at the RSI just popping up. Everything's pretty much upward momentum, and so I think it's going to continue up. And realistically, I have been using this to find the pivot points. This formation could easily, yeah, we can find support here. Hold on. It's a real good tool. Once we get there, we might find a bounce, but we can also pop up and hit the 1.618, and that's the potential bottom. Yeah, yeah, so this can potentially play out that way. Hopefully it doesn't do that. Hopefully it stays within the structure. Hopefully this acts as resistance, but we have a massive breakout. That horizontal level is broken up, so that's not good. So Tether dominance pretty much shows that crypto, people are selling their crypto for Tether, and the dominance is picking up. This structure, like you can see that it's a bullish structure. And if I was to, give me a sec. Let me delete this for a sec. If that was a level, that could be the level. We're looking at these levels, Tether to go up to that level, because that was it. That line, come on. That line was our resistance. And what we have is an ascending, it's breaking up to the upside. This is bearish, pretty bearish. And if we were to measure that height, we can potentially go really high. That's the bear market. If that's the target, let's see what's our other target from here. So Yeah, close. So we can use this high, just like a cup and handle. Let's try that, the cup and handle. Not this, we'll just ignore this one, we'll just use the cup and handle target. Yeah, this is nasty. This is, to me, this is confirmation that we are pretty much in a bear market. We're going to have a deep pullback, and Tether is going to show us the way. You can see the line being extended, and that might be the bottom when it hits that level. So if we use that line, bonding wedge, yeah, depending on the angle, it's not going to go straight up. It can, but capitulation wise, if it capitulates, it could even go up further up. So yeah, keep an eye on this to find your levels of support, but that's pretty much not looking good. Thank God I haven't got many alts. Still, I'm going to hold those ones that I'm going long for a few years, but either way, I'm mostly in Tether at the moment. So I'm wrapping it up, guys. Please give me a like and a share. Come and join our group. This is our group. I'll just put it on the screen. I actually can't. It's in my signature, and you can come and join that, or come to our